This is a very, very good slide summary for you to take note of after you've done Learning Unit 6. It's a bit of a comprehensive overview of the main differences between the two inventory systems. Now, in Learning Unit 6, you were introduced to the periodic inventory system as well as all the journals. So there's a lot of Learning Unit 6 that is a bit of a revision from Learning Units 4 and 5. But the essence of Learning Unit 6 is for you to be able to work with two inventory systems efficiently. Okay, and these slides are designed to help you with that. So you can see by comparison, if we say perpetual, what does it practically mean for journals? If we say periodic, what does it practically mean for journals? The same for T accounts, the same for trial balance, and also over into accounting 1B, I've added the financial statement relevance as well. The main thing I always say when I do anything related to Learning Unit 6 and inventory systems is that it doesn't throw any of your basic rules out the window. You still do debits and credits, you still do accounting equation, plus minus, debit plus credit minus for the same account classifications as you always did. It's just how you record inventory, how you measure your stock levels. That's the only component that you treat differently. Okay, so in the accounting equation, firstly, we did this already in Learning Unit 2. We also introduced you to the perpetual periodic system back then as well. Okay, so a bit of a recap. In the accounting equation, in the perpetual system, we work with inventory. We increase inventory when we buy, and obviously credit when we return or when it's drawn. Inventory by nature being an asset means that we would plus or minus A in the accounting equation. When we then had a sale, we would credit inventory as an asset and we would debit cost of sales in the equity column. Okay, and anything else relating to inventory purchases, so transfer duties or any other inventory related expenses would also be going into the inventory account, which is an asset in the accounting equation. Okay, in the periodic system, anything relating to inventory purchases would be dealt with in the purchases account, which is debited as well, but purchases is an expense. So we would be affecting the owner's equity column. When we make a sale, we make no adjustment to any inventory or any cost of sales. We don't actually have a cost of sales account because remember we do stock take at year end and then we do our cost of sales calculation. Any other expenses relating to buying stock, so carriage, freight, any of those costs, we classify separately as different expenses, where in this system, we bundle them all into the inventory account. In the journals, journals are actually quite straightforward and quite simple. In the perpetual system, we've got a cost of sales column. So we have a cost of sales column in the CBR, the DJ, and the DAJ. We have no cost of sales column in the periodic system. Pretty simple. Okay, so we don't work out any cost of sales. In the other journals where we work with inventory, so the CBP, the CJ, CAJ, and PCJ, we have a column for inventory for any purchases of stock. In the periodic system, that same journals, the column name changes to purchases. And lastly, when we do general journal entries, they love to trick you at this point. When we have the drawing of stock or the contribution of inventory, whenever we work with inventory, please use the name inventory in your journal entry. In the periodic system, please use the name purchases. Then over to your T accounts. Perpetual system, we have an inventory account that's typically quite used quite often, where we put in debit entries for buying, credit entries for returning, credit entries for cost of sales. And we have a closing balance. And that closing balance represents the value of our stock. Because remember, if you look at this little first bullet point, we booked in all the purchases, all the returns, and all the sales. So the inventory account basically ran our stock levels throughout the month or all the months throughout the year. In the periodic system, we have an inventory account, but it takes the opening balance at the beginning of the year. Any other entries related to stock, we move over to purchases. So purchases account and all the other expense accounts like freight and carriages I mentioned earlier, they take all the other entries. Okay, so you actually have a whole host of T accounts that you work with, where in the perpetual system you have one T account, and that's the inventory T account. Periodic, you've got inventory for the opening balance, purchases for buying stock, purchase returns for returning stock, freight charges for freight charges on stock. Okay, so you can see you have a few more T accounts. And lastly, very important, you have no cost of sales T account at all. Then the trial balance. In the trial balance, we have perpetual system. We've got an inventory account I just mentioned earlier with the closing balance of stock, and we've got the total of all our cost of sales. In the periodic system, we have the opening balance for inventory that we've always had. We've got a total for purchases, a total for all the additional expenses, and again, we have no cost of sales. Okay, so you can see again, more balances, more accounts. And then when we get to Learning Unit 9, I will repeat that when we get there. Perpetual system, we use the cost of sales account. You'll understand that more when we get there because you have cost of sales. In the periodic system, we don't have cost of sales, so we need to go and calculate this. Okay, your lecturer would have illustrated this in Learning Unit 6. How do you calculate cost of sales? Because because of Learning Unit 9's procedures, you'll still see we need to use cost of sales. But in the perpetual system, it's a given. In the periodic system, we need to go and calculate it. And then very, very far ahead for you still over to next semester when we work with Accounting 1B and you draft financial statements for the business, we still have the two systems. In the perpetual system, because we've had cost of sales, it's still there running. We can use cost of sales to work out gross profit and present cost of sales in the statement. Whereas in the periodic system, we don't have cost of sales. Again, we'll work it out. Okay. So it's a bit of a calculation, opening balance of stock plus purchases plus charges minus closing balance, and we'll present that in the statement. So we'll present the cost of sales calculation in the periodic system, where in the perpetual, it's a number that's given to us, so we don't need to present any calculation, we can just present the number. Okay, so last thing, I mentioned this at the beginning. It is only your stock, inventory, merchandise, whichever word you prefer, that is affected when you choose an inventory system. Please don't throw your debits and credits out the window. Don't forget about the other classifications. All the other principles remain exactly the same. Don't alter anything else apart from the different account names that you use. Okay, so don't suddenly make your debits your credits and your credits your debits. It's just the account classification that changes. You either use purchases or you use inventory. Or you either use purchases, purchase returns, freight charges, carriages, all those different expense accounts if you are in the periodic system, or you use inventory if you are in the perpetual system.